Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors, as well as discuss what the Grants Council and ambassadors are up to. So let's get started. The Alsafina release has gone out. This release included 3 SIPs, first of which was SIP 184 for dynamic exchange fees. This SIP adds a dynamic fee in addition to base exchange fees that respond to and neutralize Oracle front-running opportunities. The second SIP to go out on this release was SIP 193, which refactors and deploys a new library for system settings to reduce contract size. And lastly, SIP 196, which removes all centralized Oracle code from synthetics contracts and testing. SCCP 163, to update Optimism Chainlink oracles to off-chain reporting, was possibly going to be going out on Alsafina, but will now be going out on a different release. All new assets rely on off-chain reporting, as opposed to the older assets which are currently still using the legacy Flux aggregator feeds. One of these new assets will be the Sol Synth, proposed in SIP 199, which was also originally scheduled to go out on Alsafina. However, given that the Sol price feed isn't ready yet, it will go out in a different release, along with SCCP 163. In case you missed it, there was an impromptu presentation on Friday for SIP 209 to update the current exchanger for backwards compatibility. The exchanger.fee rate for exchange function signature change, as a result of the Alsafina release, caused a broken integration with Lyra, so they quickly called for the implementation of this SIP to re-include the older function signature in order to remedy the situation. This SIP was implemented on its own release yesterday, Mirzam, after receiving all 8 votes in favor. There were also 3 other SIP presentations last week. SIP 202, to implement the target staking ratio, was presented again by Kane with some additional details that were clarified since the last presentation. This SIP introduces a target staking ratio that is incentivized through inflation. It will track the staking ratio within the network and modify the inflation rate weekly to ensure that this target ratio is achieved. Basically, it allows the target ratio to be adjusted, where the ratio is the percentage of SNX collateral staked over the total SNX collateral. This SIP sets the target staking ratio at 85% and will adjust the inflation weekly up or down depending on whether the staking ratio is below or above the 85% target. There was a concern about the potential for snapshotting at higher inflation rates. SCCP 164, however, introduces a 7-day burn lock, which should kill snapshotting because it would cost snapshotters the next set of rewards. SIP 198, to allow for atomic exchanges at the pure Chainlink price, was presented by Caleb. This SIP will update the existing atomic exchange functionality to allow trading at the pure Chainlink price for certain synths, and remove the restriction that requires the source or destination currency to be SUSD. Caleb detailed 2 important limitations on atomic exchanges. First, in order to add a synth, there needs to be an equivalent Uniswap pool. And second, the ones that are available have poor liquidity, making the price unreliable. This means it's impossible to configure some Forex synths due to the lack of an equivalent DEX token that has deep and persistent liquidity. This SIP therefore proposes that certain synths be traded exclusively at the Chainlink price. SIP 205, to add 5 synths on Optimism with shorting, was presented by Afif. This SIP will add Avalanche, Aave, Uniswap, Polygon, and Euro as new synths on Optimism. He explained that liquidity has been thoroughly examined to ensure that these 5 synths are suitable as new additions. The vote for this SIP is currently still open. And speaking of SIP presentations, Futures is being presented today. This has been a long time coming, so be sure to tune in at 9 p.m. UTC in the community stage. Since SIP 184 has gone out on Alsafina, it can now be incorporated into Futures. This was the last piece that the auditors were waiting for, so everything is finally coming together to hopefully have Futures ready for ETH Denver. In addition to Futures, there are also several other important SIPs coming our way. SIP 148, to upgrade the liquidation mechanism, is being worked on by core contributor Mark. As a reminder, this SIP proposes a modification to the existing liquidation mechanism, with the purpose of reducing the likelihood of cascading liquidations that might lead to the destabilization of the protocol. The debt pool synthesis as well as debt shares are also both being worked on diligently. Debt shares is a dependency for both the upgraded liquidation mechanism and the debt pool synthesis, so it's a top priority for the core contributors this week. After all of these SIPs go out, the team can start focusing on synth teleporters and debt migration. So in review, here's a quick high-level overview of everything we just went over as far as SIPs and releases go. Alsafina is designed to combat front-running and make trading more appealing while reducing risk for SNX stakers. Futures is designed to add more base volume for the protocol and push the use case for decentralized derivatives. Off-chain reporting is about better alignment with our partners, particularly Chainlink and Lyra. Debt shares and the debt pool synthesis are about modernizing our system so we can power movement between different layers. Liquidation and target staking ratios are about keeping the protocol healthy, and atomic FX and volume are for improving the tradability of synths. Core contributor Cavalier has been doing a great job distilling down the purpose of each SIP to help align the products and the roadmap. Lastly, in case you missed it, Synthetix announced a new round of incentives for WETH SNX on optimistic Ethereum, partnering with Gelato to leverage G-Uni pools that enable rewards for liquidity providers. For another 2 weeks, 50,000 SNX is being distributed to WETH SNX liquidity providers. At the time of writing, the APY is at 43%. So be sure to check out our blog post for a tutorial that explains how to use G-Uni and stake your LP tokens for rewards. In Grants Council updates, there are 4 major projects in focus right now for the Grants team. First, we have the stats page. The Grants Council has been working with core contributor DB on a Grafana dashboard, which is expected to be announced as usable very soon. This initial release will be a simplified version based on the 8 data points selected from the community survey. The next step will be a grants-led, community-built dashboard. Second, we have the hackathon. As the newest addition to the list of grants, the hackathon is a very exciting event to look forward to. The council is currently in conversation with an Indian university to sponsor and participate in this event. Third, we have the NFT project. And as we all know, the council has been working with Universe.xyz to put together an exclusively Synthetix NFT drop. Nothing to leak here yet, but Synthetix. And lastly, the tools site. And your voices have been heard. The top voted name for the tools site was, drumroll please, Tools. Front end has been delivered on this site and the grants team is just testing it now. In Ambassador Council news, the ambassadors hosted a city hall with Nuke Vaults last week where we got to talk to Calavera, Linus, and Trinity. Calavera is on the Aelan Council and has been involved with Synthetix for a while. He's an advisor to the project and is a lead developer of Nuke Vaults. Linus is also a lead developer and is building the app and helping write the smart contracts. And Trinity has been developing since the early 2000s and loves tech and coding in general. Nuke Vault started as a yield aggregator, farming yield and governance tokens. It was originally just for personal and friends and family use, but quickly evolved into an idea that could be shared with other DeFi users. Calavera explained how they realized that networks other than L1 ETH were cheaper and didn't really have any yield aggregators. As they were trying to find their niche, they noticed that the current yield aggregators had so many options, but it was difficult to identify ones that were secure and stable. This led them to refocus their efforts on stablecoin yield only. Matt asked our guests if they could elaborate a little more on how the vaults work. They explained that the vaults have been live since December on Avalanche, Arbitrum, and Polygon. Basically, you just deposit stablecoins that are then deposited into a farm protocol, Aave and Curve being the most common ones. As far as fees go, they decided they wanted to be different from other protocols that charge upwards of 20% in performance fees. Most of the fees generated for Nuke Vaults actually go back to the users themselves, and these fees come in 2 forms. First, you have a withdrawal fee. The withdrawal fee is a mechanism to prevent people from manipulating the vault yields. A 0.5% fee is charged at withdrawal and is reinvested back into the vault. With a 0.5% withdrawal fee and a farm yielding 10%, you would only lose money with this fee if you stay for less than a month. The second fee is the performance fee, and is currently set at 10% and is deposited into a multisig. They would like these fees to be distributed to the community. They are currently in the process of launching a token, with the purpose of sharing the revenue of the project. Stakers will gain protocol fees from different vaults. Seeing as how it's still relatively early on L2, the team felt like it was the perfect place for them to start building a community. Check Check out the recording of the call in our blog post to hear more about nuke vaults and their vision for the future of the protocol. Also, be sure to tune in this Thursday at 10 p.m. UTC for the next Spartan City Hall with Quixotic. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.